Joining us today, Porinju Veliyath, Equity Intelligence India. Porinju, thanks so much for being with us today on Market Guru. Markets have seen a fantastic run, and we've all been talking about how there hasn't been any kind of correction as such, particularly after last week when we hit, that massive rally post the rate cut and continued that yesterday as well. How are you viewing the kind of uprise that we're seeing here?
Thank you for inviting me for the show. Corrections have been happening in the market. It's not that no corrections happening. But what happens very, very peculiar, I have been noticing. If the market goes down by some 100, 200 points Nifty, people feel extremely bearish. They feel Indian market was a hype earlier, and they get disappointed. They think of lower levels always, especially the technical analyst. This has been happening many times if you see in the last few months. And say one day it is up by some 100 points Nifty. People feel very excited. Then people start talking India is the best emerging market, and so much FI money can come. It's the most attractively priced market. So that sentiment and the mood change drastically in a short period of time. This is something I have never noticed in the market in my last 24 years of experience. That this shows the instability of investors and trading community. In the thought process, you take a stand. Okay, India is good. We have a great leader, which is very rare for this country, and things can be very different from here. So I think 2015 will be another rewarding year for investors, but investors maybe they have to change with the market structure. Now I'm surprised to see the top brokers in India, their top 10 ideas for 2015. So that means 100 stocks should be there. Instead of that, there are only 15, 20 stocks with the 10 brokers, the top 10 ideas. And mostly these stocks are trading at 25, 30, 40, some of them at 60, 70 Ps. They are great companies. Sure. But the question is, are they great stocks? And these are like a scoreboard of 2014. They performed very well. They are good companies, great managements. But maybe the money is to be made. If you are looking at multi-baggers, potentially, maybe you have to think differently and look at the market in a very different way.
So, the best follow-up out here is what we get a lot from some of the other market experts as well, that it's become increasingly difficult to actually identify stocks with this kind of rally. You're actually saying there is still enough value in the market, you just need to dig deeper?
Yeah, definitely. There is. I think any sensible person will agree that there is a lot of value left in the market. See, bull market is just 1 year old.
True.
And please see in the perspective, we had 4, 5, 6 years of very bad times. Investors were very unhappy. They thought equity is the very bad asset class. Yeah. And everybody was selling off, and a lot of people, amateurs, they decided never to come back to the stock market. That's very sad. That's a kind of situation happening. So this 1 year old bull market, then it's not a bull market if it is a 1 year old. It's only correction of the stock markets. I don't look at the index numbers. So I feel market has a long way to go, and smart investors can make mint money. You see, the way people made money in the last 1 year, it is not the 30% of Sensex Nifty. I'm talking about people, large number of people who made 50%, 100%, 200% return on their portfolio. Not traders I'm talking about investors. And some people who used to think differently, they did not chase or go after the fancied, well-discovered FIA stocks. They went beyond that. Indian stock market this year, one should remember, we have very large number of companies, unlike most other world markets. And the structure of Indian economy, it indicates that these companies in the mid caps and many of the smaller cap companies, they have a role to play in this economy, in building up of our economy and in the future growth. Sure. So that is where the money is.
So would you in that case then play in the second rung the reform story? So if you're saying in the top rung the cyclicals are done, the likes of the L&Ts and the obvious, the ideas are done. And how would you really evaluate that? Because some might argue, and I'm playing the devil's advocate at this point, that the leverage level, especially in the second rung of the mid caps, is extremely high. How would you balance that argument between value and leverage at this point?
See, leverage levels were very high in some of the large cap big companies also.
True.
Now they have become mid cap companies. See, and like the JP Associates and of the world, there are a lot of companies. So now, so that statement is not really,
But the leverage
correct.
wouldn't bother you in a mid-cap because a lot of the mid-caps are still struggling with
Leverage
balance
is to be
sheets.
bothered in mid-cap, large-cap or small-cap, any companies. We cannot say, we need not really look at the segment they belong to. And you see many mid-caps are becoming large-caps in the market today. So, and now, if people go after all those stocks, the mid-caps which have already become large-caps, it has been fancied by a lot of broking community and big investors, and they are ignoring the other stocks. But why don't people look at the next next range of stocks, next set of stocks which can come into the large cap category from the mid caps? That is where, there are multi-baggers where you can make superior returns.
I just want to quickly go back across to what you said right in the beginning, and you said that it's a fairly volatile market because of investor sentiment here. How then does somebody new to the market actually figure out when to enter? We've managed to, of course, come up to these levels, and you're saying that it still does look shaky at times, and the Indian investor has been burnt before.
Yeah, it is a very sad thing, I will tell you. The benefits of this huge wealth creation in the stocks, in equity as an asset class, has been confined to only a very small percentage of Indian population or Indian investable middle class or whoever them. It is because people are getting a feeling that it is risky. There is a very wrong propaganda that equity is risky. I am in the market for last 25 years almost. I haven't seen equity as risky. So I don't know how people all discuss equity is risky, real estate is not risky, gold is not risky, bank deposit is not risky, and equity is the only risky thing. I feel equity is the only thing which is not risky, but if you are a smart investor, and you should have knowledge, patience, and that conviction, and you do with some bit of common sense and knowledge, and choose a basket of equities, a portfolio. I think that is the best performing. And see, people talk about corrections and they miss the opportunities. Correction, if you have a general view, okay, market can be good for next 3, 4, 5 years time in India. We have all the ingredients in place. We have got a much better economic growth. Now, China, I just understand. I think yesterday IMF predicted India is going to be the largest, highest growth rate country next year. I don't know whether that can happen, but definitely there are pockets of weakness in the global economy. Some major countries are showing tremendous weakness structurally, and India is in a very real sweet spot. See, India is the only country in the world, perhaps the only major economy in the world, where interest rates are bottoming out. Everywhere else, including US, they're talking about, sorry, we are peaking out.
Exactly.
We have got an interest peaking out.
True.
Everywhere else, it's like bottoming out.
True.
So that has got a lot of meaning and importance for equity investors. Somebody smartly look for certain segments and certain good companies, not good companies. Look at good stocks. There may be some of them may be having a perception they are not good companies, but how are they priced? The price makes a stock good or bad.
We're in conversation with Porinju Veliyath of Equity Intelligence India here on Market Guru today. Porinju, let's talk about an ideal portfolio mix right now. I mean, you have also described how you'd look largely at the broader markets as well. But when it comes to specific stocks or sectors, anything you'd like to share with us in terms of how that portfolio would stack up?
Yeah, to start with, I would like to say certain do nots,
Okay.
like to what you asked me. See, I am finding a very unhealthy trend in the market, especially by the casual investors and large number of people. They are looking at who buys what. Now, if a celebrity investor or a trader or a big operator buys it, they are very comfortable to buy it. And today, I was watching now that Q3 shareholding pattern is coming. I was surprised to see, like never before in the history of Indian markets, people are looking the day the shareholding pattern comes to see who bought it and then they want to buy. And they are not aware, maybe person A might have bought a stock at say 50 rupees during the quarter. And now the shareholding pattern his name has come, maybe the stock is already 130, 40 in a mid-cap or small-cap company. And they're just blindly buying it. Maybe at that price it is overpriced. So there is no easy way to make money just following a big investor, especially when you do it a bit late. maybe when he buys, maybe at that same time, if you can get it's a different thing. There's no point in following the large investor or the operator behind the stock after the stock has gone up significantly. And this is a major trend, which is a very unhealthy trend. See, I'm again telling you, there are companies, now today, research is a very easy thing. In the internet era, on a click of mouse, you get every aspect of a company without any efforts. Things were different when I was a research analyst in the 90s. It was so tough. You have to go to the company, see the factory, whether the factory exists or not, as they say. And it was so tough thing to gather information. It might take 2-3 months to really get a feel of a company. Sure. Today, in few seconds, you get a feel of a company. So why not people, now mostly educated people, they are investors or traders, they do all those kind of things. And identifying values, when we have large number of companies, it's so easy. Now, to your question, I was looking at real estate sector.
Right.
Of course, a month ago, I talked about DLF when it was at near 100 rupees. See, at 1,200 rupees or 1,000 rupees, people were very comfortable buying DLF. Okay, with the same fundamentals, maybe a better fundamentals today, I feel. Even though the industry, there is some temporary problems. At 100 or near 100 levels, people want to sell off the stock. I think there is a huge asset liability mismatch, or the huge gap between asset and liabilities of these companies. Not only DLF, maybe the Anandiraj and a lot of companies, smaller companies, and there are some good blue chip companies in the sector. And I am bearish on real estate prices all over India for next many years. It has already started. Yeah. But I am very bullish on real estate companies, because even if real estate prices goes down by 20-30% from these levels, these companies have, their enterprise value is significantly below the intrinsic value. So I think there's a huge gap, and everybody has been selling off these companies in the last many years, and they have come to a very attractive price levels. So choose your company. And I think, see, the interest rates are really coming down. There is a real trend of inflation coming down, and there can be demand picking up. So people have really got fed up. Everybody's scared of buying or even talking about these stocks. I think some of them, a lot of them, in that sector looks very attractive to me at today's price.
Fair. So that's as far as the real estate pack is concerned. But, when we started off our conversation, we actually spoke about the fact that it's important to look at the way some of these companies' valuation really plays out. And there's no point buying a probably 30x or a 50 or a 60x company. So let me ask you that. Then in the broader market, in the mid-cap space, are there any sectors that you believe could be the big space in 2015 or 2016? I don't want to get a BTST or a short-term call, but from a long-term point of view, any sectors, any stocks that you're focusing on beyond real estate?
It's not as a particular industry sector. I would say another space where people should look at. See, the low P's. Today it has become a fashion in the market, even among amateurs. Okay, buying a 30-40 P stock is something. Then I am a great value investor. Sure. Because the company performed very well in the last 2-3 years. So now it looks so good. Okay. Why the stock look good? Because it performed in the last 2 years. But is it the way to buy? Look at stocks which have been performed. And I will tell you one more thing. Look at some companies, not every company which came out with bad results. Now the season for Q3 numbers, everybody is looking for searching which company made the best results, best numbers, reported the best numbers and trying to buy it. That is a very foolish act, I believe. In general, there can be exceptions. There can be some great companies, great businesses. They may have a quarter or two problems. So they might have reported some less than expected kind of net profits or revenues for some temporary problems. And the stock price has got a tendency to go to 1-year low. True. I was just looking at some companies like Unichem Lab, which came bad numbers. Mahindra and Mahindra Finance. I'm just not trying to recommend this stock. See, what I'm trying to tell you, some of these companies could be great businesses going forward when you look at next 2, 3, 5 years' time. And maybe this quarter number may be not good. Look at maybe Bajaj Electric. I see a lot of companies which are not currently doing well. Currently means this quarter. Can you invest in a company looking at 1 quarter, 2 quarter results? That's a very wrong way to do it. That's not investing, that's pure trading.
I think the bigger question now, last year spoiled us. We looked at 30% odd returns. The beginning of this year has been blockbuster, starting with Dr. Rajan's rate cut and now the spectacular bull rally. I think, as Abha was mentioning, with the domestic money always feeling like they're going to get burnt, I think they want to know they invest smartly. do you think that what is the kind of return they can hope from the index? I know that you're looking that we have to look beyond the index, but the index is always seen as the benchmark. Do you think that it's going to be comforting to see the kind of returns we saw last year, this year again?
I will say an investor in the market, if he makes returns equivalent to the Nifty or Sensex, that is disappointing. I'm not impressed. But of course, index this year, I believe it can easily cross. The Nifty can go beyond 10,000 levels. I'm not a fan of Nifty or anything, but still, it's a common sense approach to the index. See, the last year we had something like 30%.
That's right.
See, all my investors under PMS had an average of much above 100% return after all the expenses. So it's not only me, a lot of people have created that kind of returns in this market. And that can easily be repeated in 2015, provided you are not chasing the fancied stocks and the operator-driven stock or the FI chases. No, look at values. Right. There are a lot of them. Why now today if somebody says the stock is at 8 PE, oh, then I don't want to buy. If somebody says this is 40 PE, it's a great company. I don't know. There are a lot of them, now people talk about the V-Guards, the Kitex, a lot of smaller companies, but they are now grown big, 2,000, 3,000 crores market cap from 50, 60 crores. Now people are liking to buy it. True. Now people feel prestigious to buy a V-Guard or a Kitex or a Page Industries kind of, I'm just telling names, I'm not recommending this or anything. Why not people look at companies in the same segment perhaps, not so fancied? Yeah. Now people are after, say, Havels and kind of companies. Why? Bajaj Electric is a great company when we look at, but they're reporting losses. For some reason, whether this loss is going to continue, whether they are going to turn around. There are a lot of turnarounds in the business, the profitability. There could be a lot of turnarounds in India in 2015 about managements, the management style changes for better. There can be turnarounds in the balance sheet.
Right.
So look for turnarounds of balance sheet, managements, and the bottom line in 2015.